First things first, when I'm starting to develop a game plan, when I'm getting prepared for the day, I'm always taking a look at time. So in terms of my game plan, time is the most important element. Then comes bias or draw on liquidity. And lastly, entry function. Starting with time, we hop over on the economic calendar. We can see that there's no red folders today. I want to be participating on days that have red folders, but that does not mean I cannot participate on days that don't have red folders. On days that don't have red folders, I'm simply just more patient and selective than normal. Reason being is I want the volatility, right? The red folders are the volatility injection. We quite literally need price to fluctuate for our P&L to fluctuate, right? So I want volatility. On days that don't have red folders, that doesn't mean there can't be volatility. It's just less likely. It's less probable. We know that when there's a news event, that's going to cause volatility. So that's why we want to be participating on days that have red folders. So we'll be aware of the 10 a.m. We'll be aware of the 10 a.m. news, but understanding it's not a red folder, I'm not as concerned about it as I would if it was a red folder. After understanding the economic calendar, that's when I hop over to the daily chart. The daily chart is where I get a bias from. And as you can see from my weekly Outlook posts, the weekly Outlook post is over in my trading desk. This is what I was looking for to start the week. Price displaced through a swing high. Okay, so when I'm on the daily chart, I'm looking at swing highs, swing lows, and FVGs. Those are the things I analyze to determine a bias. Seeing that price created a bullish FVG as we were displacing through the swing high, that's what made me look for continuation higher. So you'll see in the weekly Outlook post something that looks like this. Due to the FVG being here, I was looking for a continuation of a bullish move. We got that yesterday. We got another new all-time high. And we're still sitting in the same information, right? There's no new information here on the daily chart that would determine a different bias. So I have no reason to change my bias. I'll continue to keep being bullish until there is something definitively, decisively, clearly stating otherwise. Okay, so something that would be so clear and obvious that would make me change my bias from bullish to bearish would be an invalidation of this bullish FVG. So if we saw a daily candle closure like this, all right, let's imagine this is a down close candle. I tried to make it black because my down close candles are black. I don't know why it's gray, whatever. This is something that's clear and decisive, right? A large down close candle that clearly and decisively closes below the FVG, right? A down close candle that clearly and decisively closes below the bullish FVG, invalidating the bullish FVG, right? So the entire idea here is since this bullish FVG is present, we should see continuation. So unless price invalidates that idea, I'll continue to have a bullish bias, right? So this is what invalidation would look like. A large down close candle that invalidates the bullish FVG. So since that has not happened yet, I will continue to be bullish until price says otherwise. Very simple. There's no confusion there. We're not pointing to 100 different concepts. Very clear. There's a bullish FVG on the daily chart. If price continues to move higher from it, I'm going to remain bullish. The only way I would change my bias is if that FVG was invalidated. Nothing more to it. So in terms of targets, since we're bullish, we'll aim at previous day high. Okay. From the daily chart, I obtain a bias. That's when I then move to the hourly chart and look for higher time frame points of interest to engage with that bias. So when I have a bullish bias, once again, I'm still using the same information. Simplicity brings clarity. This is why we only use a couple concepts. You do not need 100 concepts. So it's the same thing here on the hourly chart. I'm looking at swing highs, swing lows, and FVGs. Right, so the higher time frame points of interest that I use are swing highs, swing lows, and FVGs. When I'm bullish, I want to be longing from bullish FVGs or swing lows. When I'm bearish, I want to be shorting from swing highs or bearish FVGs. Once again, simplicity brings clarity. There's no reason to be using hundreds of different concepts, right? Notice I haven't mentioned, midnight opening price. I haven't mentioned new week opening gaps. I haven't mentioned inversions. I haven't mentioned RSI indicators. No, you don't need any of that stuff. The easier you make it on yourself, the easier it'll be to execute. Think about it. If you had a checklist that had 20 different things that needed to be checked off to get into a position, it's going to be a very minimal amount of times that you have all 20 things checked off compared to a checklist that has one or two things. If you only have to check off one or two things, you're not going to fall into information overload, so you're not going to confuse yourself. And then two, there's going to be positions available to you because you only have to check off two things compared to 20 things. Okay, so it's very, very easy. Just time is the first element. Look at the economic calendar. Make sure you're aware of the red folders. Then participate during the opening times, right? We're getting prepared for New York Open right now. Once you understand time, then move to the daily chart. Look for a bias, right? Look at swing highs, swing lows, and FVGs. Create a bias. Once you get a bias, then go to the hourly chart to confirm that bias. And the thing that we use to confirm that idea is SMT. Take a look at this swing low here. 9 a.m. swing low on NQ. Notice how NQ made a higher low. Using the same point in time, right? Literally, I literally mean the time of the candle. So the same point in time. So the 9 a.m. candle on NQ, the 9 a.m. candle on ES. The 4 a.m. candle on ES, the 4 a.m. candle on NQ. Notice how using the same 2 points in time, NQ made a higher low while ES made a lower low. Bullish SMT. Right? Where do we long from? Hourly swing lows. This is an hourly chart. This is a swing low. This is a swing low. You have another swing low over here. Looks like there's a bullish FVG here, right? So where do we long from when we have a bullish bias? We look to long below swing lows and inside bullish FVGs. Right, when you short, you look to short from bearish FVGs and swing highs. Same exact thing, but opposite. When you want a confirmation to that idea, you look for SMT. Okay, so time, bias, confirmation, execution. There you go. You got about 3 things that you have to confirm to get into a position.